My guest today is Michael Blank. Michael is a serial entrepreneur. He's a real estate investor. He's a multifamily syndicator. He's a frequent contributor on Bigger Pockets. He's also a real estate investing mentor. And he's also the host of an awesome podcast. I can't encourage you enough to check it out. It's called Apartment Building Investing Podcast. Michael, welcome back to CREPN Radio.
Darren, you're very kind. Thank you so much for the opportunity.
Well, I'm excited to talk to you. It's been a while, and I've been listening to some of your recent interviews, and I just got to say your podcast is really you've done a great job, and encourage all the guests to check it out. So, but before we do get going here, if you could do just a short kind of a history, give us a little bit about your background and how you got into real estate.
Yeah, so I got into real estate because I've been seeking permanent financial freedom, and that journey has been quite a bit rocky. In the process, I've tried many different things, some of which were successful, some of which were less successful, and one of which cost me 95% of my net worth, which was restaurants. And the one thing, and I've done real estate, I've done short sales, I've done rentals, I've done house flips, and I've done apartments. And of all the business I've done, including software, restaurants, I traded options for a while. Multifamily is, in my opinion now, the one and only way to achieve permanent financial freedom. And so that's how I kind of started focusing on multifamily. And what's really exciting about it is that you can do it, or people can do it, without any prior experience or really cash of their own. And most people that go to RIA meetings every single month just don't know that. They have heard that apartment business is a great way to quit your job, but in their mind, it's an advanced strategy that they might aspire to after 5 or 10 years of single family house experience. And the guests I have in my podcast literally just tell a different story repeatedly. So that's why I focus all of my content, all of my training on helping people do their first multifamily deal, regardless of what experience they have or how much or little money they have.
Got it. Well, it's clear the multifamily is kind of the path you've chosen, and you've got plenty of stories to support it. Could you expand a little bit on kind of why you believe it's such the path to financial freedom?
So I flipped houses, 36 houses, and made good money. But the problem is that it was a lot of work. Now I get it. I listened to read all the books, and I had my team in place, right? I try to automate everything. But still, at the end of the day, it's a lot of activity, and you're dealing with a lot of different people who come and go. And if you're not buying, fixing, or selling, you're not going to make money. And the worst is once you do sell it, there's no residual from it. So I do all this work, 36 houses, and I got nothing really except for the $20, $30, $40, $50,000 I made on the house flip. So there was a fundamental flaw in that, which I didn't get until a little while later. Rentals is a good thing, right? Because that's passive income. The problem is after I had a couple rentals, I was like, this cash flow is pretty good, but if I'm trying to replace $10,000 a month in income, how many single family houses would I need? And I was like, holy crap! If I get my houses to cash flow $200 per month, and I'm talking about really $200 a month, which is hard to do. If I did that, I would need like 50 houses. I'm like, my gosh, it took me 3 years to flip 3 dozen of them. And how long will it take me? And then how am I going to manage all this stuff? It was like a management nightmare, right? So I'm like, well, that can't be it. And so there's multifamily, and they have all the advantages except for what people think about multifamily. What the advantages are, it's the most passive thing you can do once you find the deal, which is a lot of work, and once you put the property manager in place. So in the beginning, there's a lot of work, but once everybody's doing their job, I mean, it'll take you 30 minutes a week to manage a 100-unit building. It's mind-boggling to think about that. There's no other business in the world. I can get funding, almost unlimited funding. I'm not limited by how much I've borrowed, how many houses I've got, and not only that, but there are people bidding. I can borrow millions and millions of dollars at like under 5% with like 20% down. There's no other business in the world I can do that in. I can raise money for it because people understand real estate to a large degree, because most people live in a house. So I go, real estate, I have a certain degree of comfort with it, so I can raise money with it. And I can start small, which is great, right? Because I got to get to start somehow. And I can scale it however big I want. I can generate $5,000 in income and sit on the beach for the rest of my life, or I can keep going because I enjoy the activity. So there are so many boxes that multifamily check. The biggest problem with it is of the, I would say, false beliefs that people have about it.
Got it. So how do you take somebody that's kind of on the sidelines, that's wanting to do this, somebody that's not yet in the game, and how do you encourage them to get started if they don't have any experience, they don't have any money? How do you make that jump?
It depends on what state of mind the person is. In other words, if they're already thinking real estate, I can work with that. Now, if someone's not thinking real estate, they probably don't get it quite yet, right? But if someone's thinking real estate and they're thinking passive income and wealth, and maybe they're maybe even thinking just doing this on the side so they have some extra beer money. I don't know. But if you're really seriously, most people that go to the RIA meetings every month, they're there because they want what? They want freedom. They want financial freedom. They want options. They want to control their time. That's why they're sitting there every single month, right? Why would you why would you bother? Right. So the problem is, though, that their strategy is often misguided. The truth is that they most likely can't quit their job with single family house strategy. So that you asked the question, how do I get someone from where they are right now to, taking a jump into multifamily, which is for many people in their minds is a huge step they wouldn't even consider. I mean, they're trying to wrap their minds around, a single family house, or maybe they even have a single family house. And the way we do it is there's really two main objections that I get over and over again. I kind of alluded to them before, but one is I don't have any experience. Let me get some. Let me get, several years, maybe buy 5 rental houses. And the other one is I don't have any money. I'm going to need, these are bigger assets. I'm going to need more money. And I'm like, dude, I can work with that. I can work with your lack of experience, and I can work with your lack of money. Okay. And the best news is you don't have to spend 5 years going through a single family route, because I can already tell you where that's going to end. It's going to end in a lot of frustration, because a lot of people who come to me either have done no real estate, but many of them have, and they've done single family houses, and they finally wake up to the fact that they're saying, oh my gosh, so much work, I can't scale it. What else is there? Okay. So if I can help people shortcut that a little bit more, then maybe I'll made a difference. Right. So those are the two main objections I get. Oh my gosh, I don't have any experience. And I don't have any money. So maybe we can talk about both of those if you want.
I was going to say, how would you we start on the experience side? If somebody's got zero experience, how do you short circuit that? Or shorten the distance from zero to experience?
So I started multifamily with experience. Well, I thought I had experience. I started with, at the time I probably flipped a dozen houses, or maybe even more at the time. And I was really disappointed by how little / no credit I got for that. I would call up brokers and they would ask me, what my track record is. Well, I flipped 20 houses. I'm the man. They're like, yeah, Michael, but how many multifamily have you done? Well, none, but look at the houses I flipped. And they're like, call me back later when you've done because, whatever. Investors, the same thing. Investors were like, well, how many multifamily have you done? Well, no, I haven't, but I've done 20 houses. And they're like, yeah, call me when you've done a deal or two. And so even with my perceived lack of experience, I wasn't getting anywhere. And it was really, really frustrating. And now I know certain techniques that short circuit that. One of them, for example, is get some education. Use the right language. Don't use stupid language where you sound like a newbie, right? So you'll know that you're sounding like a newbie if you get questions about your track record, if you're asked to submit proof of funds. Those are all giant red flags that whoever you just talked to thinks you're a newbie and you screwed it up, and it's going to take you a long time to fix that. So to avoid that, do some kind of training, seminar. I have online courses. There's many on there. Get some education so you're using the right language. Okay, that's number one. And number two is don't talk about yourself. Talk about yourself in terms of your team. Okay, if you don't have any experience, then bring people on your team that do. Right. So when you get the, let's say you. Now, let me ask you, so if you use the right words, chances are that you're asked about your track record or proof of funds are very, very slim, okay, based on how you talk. So, but if you are asked, and the way you talk about yourself is in terms of your team, right? So if you're going into a market and you're looking for deals, well, find the most well-known property manager in town. And it might take you a little while, ask around, and you got Frank at XYZ Management Company, and the broker says, well, what have you done before? Or even before when you talk about yourself, like I got Frank from XYZ Company on there, like, oh, Frank, yeah, he's great. Yeah, he manages 5,000 units. Yeah, I got so-and-so closing attorney. Oh my gosh, he's handled like 2 of my transactions. All of a sudden, instead of talking about you, you're talking about your team members,
Got some
right?
credibility, huh?
Maybe you have an advisor or a coach or something. I have so-and-so, I have Michael as my coach or advisor. He does a podcast, he does this and that other thing. And the people kind of go, wow, your team is amazing and you're really serious, right? So that's how you can very, very quickly, in a matter of 30 days, and people have tried this. I'm not making this stuff up. I ask my students frequently, hey, when's the last time you were asked for proof of funds? They're like, never. Never asked for proof of funds. And it's because of the language they're using and because of the team they're building around them.
Got it. So the team play, as far as the experience and kind of build the credibility, that all makes sense. Let's talk about the money. How do you go from I got no money to I got a team? How do you overcome that hurdle?
Well, you overcome it in a similar way. So if you lack something, then find someone who has it and partner with them, right? So if you're quote, you're not really partnering with a property manager, but you bring them on your team, the solution to the money problem is really raising money. And when I first did this, I did it for single family houses, because when I started with single family houses, I had deployed my entire net worth in the restaurants. That's a topic for another podcast, but I had none of my own money. I really wanted to flip houses. It's like, I want to do this. So I said, well, how am I going to solve this lack of money? And I was like, well, let me just talk to some friends and family, and let's see what kind of response I get. And someone was dumb enough to invest with me, and invest $50,000, 12% interest, 6-month term, and I was like, holy cow! And then his light bulb went off in my head, going, wait a minute, let me get this straight. I can do stuff without money. In other words, my ability to do stuff is only limited by my ability to find deals and raise money, and that was like a huge aha moment for me. Now, the truth is, there is a ton of money out there looking for a return. And a lot of that money is looking for real estate because people like real estate. Now, sometimes when I go into a RIA meeting or I do a webinar and I ask for a poll, and let's say there's 100 people in the room, and I say, hey, who here has at least $25,000 to invest in real estate? And a bunch of hands go up. I'd say maybe 40 hands go up. And I say, okay, keep your hand up if you have more than 50,000, and maybe half the hands go down. Who here has more than $100,000 to invest, and maybe another half goes down? And who here has more than $500,000 to invest, and maybe 1 or 2 people keep their hands up, right? And when you add all that stuff together, there's multiple millions of dollars in that one room in REIT people go to. The truth is, there are high net worth individuals who have 2 problems. They're not getting a consistent, reasonable return on their money, in an acceptable risk profile, and they're paying too many taxes, right? And real estate solves both those problems to them. So you're actually doing people a disservice by not giving them a deal. A lot of people are afraid, I'm afraid I don't want to bug them or something. You're not bugging them. You're doing a disservice by keeping opportunities from people. So number 1, there's a lot of money out there. Number 2, you're helping people by bringing opportunities to you. All you need to do is you need to know how to go about doing it. And that's just a matter of education. And again, attend a seminar that teaches raising money. I have one of those. There's others out there. And, just so once you see the system working, it's not rocket science. I mean, yes, it took me several years to figure it out, but once you know the system, it's something you can easily learn and replicate. Okay. And then it's one of those things where you get that first commitment from someone, and you're like, holy moly. And it's like the snowball effect, and it gives you a lot of confidence. And once you have that first one, which might be really hard to do, it might take you a couple months to do it, and then all of a sudden you get this one person, and you boost your confidence, and people can sense that, and all of a sudden your second and third follow, and it's kind of the snowball effect. So the skill of raising money is priceless. And I even tell people who have $1 million in the bank who insist on using their money, I said, that's great you have $1 million in the bank. I still want you to raise money, because the skill is priceless, and you do 1 or 2 deals and then you're out of money. Then what? Now you're stuck, and you can't move forward. So the skill of learning money is extremely learnable, extremely doable, and priceless.
No, it's awesome. And like I said, money is the key that makes the deal work. Let me ask you something. So we've talked about how to bridge the experience gap, essentially create a team and get educated. We've talked about raising money to get the other piece that you have to have, and that's kind of a critical to really grow. That's something you're going to have period. What's your thought on partnering? Do you have any kind of, uh, notions on that? I mean, I know you do syndicating. What are your thoughts on partnering?
I like partnering, and we have. Let me talk about that because this is a really, really great way. There's multiple ways for people to get into their first deal. Options scenario number one is that you become your own syndicator. You find the deal, you raise the money, you put it together, right? You control every piece of it, and it's very satisfying, fulfilling, and of course you get to keep most of the pie as a syndicator. And that's probably the most traditional route, and that's the route most people eventually want to get to, because that's how we build passive income, long-term wealth, and it's also a fun activity. But there's accelerators. Okay, let me talk about the accelerating is partnering. And there's at least a couple. There's maybe 2 or 3 different accelerators to help you help people get into their first deal. One, of course, is by passively investing in someone else's deal, right? Maybe you can find a syndicator that will let you look over their shoulders a little bit, maybe give you access to due diligence, maybe even meet you at the property. There's not many out there that will do that because it's kind of a pain in the butt to do. But maybe you can find someone and invest passively in your deal. Kind of look over your shoulder, right? And that's a great way to get going if you have some money. There's another way to do it, which is similar to that, and that is finding a deal, right? So let's say you have money, you invest passively, and let's say you don't have money, but you find a deal, right? So a great way to get into it, obviously, is to find a deal and then raise money for it. But sometimes raising money for it can take a long time, and maybe you actually get a really nice deal under contract. So late last year, we rolled out a program called the Dealmakers Mastermind. The main point of it was to help people, give them feedback, and help them become better in their analysis, because analysis is at the heart of the skill of doing multifamily. It increases confidence, allows you to make offers, that kind of stuff. But also increasingly, people were submitting deals and they wanted to partner with us. So what we did is we rolled out a deal desk process that allowed students or people to partner with us. So they find the deal and we raise the money for it. We closed our first deal with a 69 unit in Memphis in that way. And there was a gentleman by the name of a young guy, mid-20s, found a 69 unit in Memphis, actually managed to get it under letter of intent and then brought it to us. And we put a process in place that basically qualifies the deal, helps the student get it to the point where we can get it under contract. We work out a joint venture agreement with that student. And then we move forward together as essentially general partners. And so since then, we've closed 2 other deals in the same way, and we have a really big one under contract, a 321 unit in the same way, right? So as you know, and this really gives people a lot of confidence. If we can say, look, I'm going to teach you to raise money, but at the end of and you still should still do that, but I'm going to take the money thing off the table, right? If all you can do is find us a deal, follow the process, analyze it, get it negotiated, get a letter of intent signed, and then bring it to us, we will then raise all of the money for that. So this 320 unit, we're raising $3.4 million for, and the student gets to stay in the deal, right? So unless they're a complete knucklehead, they get to stay in the deal, and they're gonna be expected to do due diligence and asset management and that kind of stuff. And it has been very empowering to people to get started in that first deal.
Wow, that's incredible. I mean, what a great vehicle for the opportunity, I think, because, we've talked from basically the guy that has no experience and no money, and now there's basically a platform, you've shown a path on how somebody, if they can just find the deal, they can actually be a part of it and, get into multifamily. That to me, that's incredible right there. I mean, talk about taking the limiters off. That's huge.
I think it's unique. I don't know anyone doing this or with any kind of scale, and we're pretty serious about that. We created a new equity company called Nighthawk, and we have some capacity there. I have a partner in that, and we actually have people working us, so that really allows us to scale this up, because since we launched it, we probably have 1,500 units in the pipeline right now. So it's been really, really interesting. And what the conclusion to me is the deals are actually out there.
Did you say 1,500 deals in the pipeline?
Yeah. We'll part of the end of the year, we'll probably have closed 600 units from this program. We'll probably have another 1,500 in the behind it somewhere. But the deals are being done, but they're not falling in people's laps, right? People think they're going to make a half dozen offers, and they're like, oh, shoot, I didn't get a deal. Well, they're not going to fall. You're going to have to hustle a little bit more than making 6 offers. So this is a great way for someone who doesn't have money but is hustling. to get into the game, right? And now that they're in their game, they're a general partner, they're a co-signer on the loan. My gosh, now they have track record. What does that do to their comfort level? What does that do to their confidence, right? I mean, my gosh, hopefully they don't need us in the second deal. They can go off and do their own, and that's perfect. That's fine by us, right? Or maybe instead of doing a 69 unit, they're gonna bring us a 300 unit deal, and they still need us, but now they're gonna raise maybe $500,000. Fantastic, right? It's just fantastic.
Oh, that's awesome. Do you find, is there a profile of the property that you're finding that you mentioned your deal desk? You've got kind of a screening process. Can you talk about that at all as far as what are some of the criteria you guys look for?
Yeah, and so there are, and we're formalizing the program around that a little bit. So, for example, there are criteria around cash on cash return. We're looking for an average cash on cash return of 10% over the 5-year hold, and we really want to be at 10% cash on cash return upon stabilization in year 3, right? For example, we want the IRR, or the average annual return, or the IRR, to be at least 13%. So that puts the average annual return without a refinance around 15%, because the IRR and the average annual return are a little bit different. I don't want to confuse people, but think average annual return of 15% or more over the course of the life. And we really want the numbers to be able to work with a sale in year 5 now, and that's just only because a lot of investors really want to be out of the investment in 5 years. So roughly, we're staying out of rural areas, and so roughly those are kind of criteria. We've built kind of these things into our analyzer, which is the syndicated deal analyzer is what we use for that, and it's kind of a red light, green light system that helps guide people to what we're looking for, and that has changed a little bit as we've gotten into this process and we've seen more deals, and we're trying to hone that process a little bit more to help students identify what we're looking for and what constitutes a good deal. And at the end of the day, there's a good degree of subjectivity. There's a gut feel to it, right? So even once the deal is presented to Nighthawk and it checks off all the boxes, Mark and I might kind of go, don't like the deal for this particular reason, and we can't put hard criteria around that. It's a little frustrating sometimes for people that have gone through this process and we're like, we just don't like the deal. We don't like the amount of Section 8. We don't like this neighbor. We don't like the crime profile. We don't like the fact that we're assuming a loan and we have to be out in 4 years or 5 years, whatever the case may be. It just increases the risk factor, and we're just really conservative in how we underwrite deals, and so sometimes it's a little frustrating, but that's why we have the experience, to kind of guide people in that way.
Let me ask you on the, you're talking about how, like in a syndication in your deals, you guys have a timeline based on the investor expectations. And my question is when listeners are going out looking for deals, is it likely to assume that the ownership of those deals have similar interest in exiting the property on a certain timeline for a certain return, or are you finding that it's more of a kind of a tired ownership opportunity, or is there a what to look for I guess because I think that there's a lot of talk out there that the market's overheated, you can't find any good deals. Kind of thing, but I think for the lesser inclined, that's enough to just say, oh, there's no more opportunities. But the reality is there's constantly opportunities, and kind of getting to that understanding of why there are constantly opportunities.
Yeah, so you're asking, why do people sell, right? So ideally, you never want to sell anything, ever. And my favorite strategy is to do a cash out refinance, return the majority of the investor principal back, and then hold on to that thing forever, right? The question is, why would anybody ever sell? And it varies widely, right, Darren? What we've seen is that a lot of times people are selling because they're retiring and they've been self-managing, and that presents a huge opportunity because it hasn't been professionally managed. That's just not efficient. The rents are under market. They're taking too long to turn. There's too many vacancies. The place is tired. They haven't really put money into it. And those are typically from self-managed or semi-self-managed properties of people who are, they're retiring and they're liquidating everything, or they're moving into more, conservative, like triple net investments, that kind of stuff. Or they're changing their strategy into assisted living or something like that, and they want to. At the end of the day, I don't really care.
Right.
Why they're selling.
Right. No, and I guess the point is that regardless of the quote news or the market news or whatever, there are opportunities out there because there are people that are, in whatever stage they're in, whether they're done owning, they're ready to move on, or their financing's coming up, or whatever the case may be. There are opportunities out there. You're going to have to look for them, though. Bottom line.
There are, and that's very much the bottom line. The opportunities out there, and just looking at our deal desk pipeline, it's certainly proof. I also have peers that are syndicators, and they're doing deals, but they're not sitting around, waiting for someone to drop in their lap. They're working it, right? They're calling their brokers. They're out looking. They're beating the pavement. They're networking. They're talking to their property managers, right? So they're not sitting around idle waiting for deals to come to them. So you have to hustle with it. But you know what? At the same day, people are working hard at their jobs right now. So why not work a little bit hard at something different so that you don't have to in 3 to 5 years?
Right. No, and I think the thing that I think that a lot of listeners and myself included look at real estate is just it's got such a long tail and an opportunity not only to replace your current income but retirement, et cetera. As opposed to kind of you go and you work however long at a career, you take your last paycheck and then you hope your 401k lasts, kind of thing. And here you can actually take control of it and being more actively involved in the asset and understand the money and make it grow and have fun.
Well, bigger picture, Darren, right? I mean, like you said, and this is one of the reasons, the main reason I like multifamily, because you can actually replace your income in 2 to 3 years. And I'm not making this stuff up, but literally I'm writing a book on it. It's called The Law of the First Deal. Well, that's not the name of the book, but it's around the principle of the Law of the First Deal, which says that if you do a multifamily deal of any size, you will be financially free in 3 to 5 years. And actually, my research is more like 2 to 3 years. It's not from the time you do your first deal. It's actually from the time that you decide to pursue a multifamily strategy. And I have example after example after example from them. And I ask people, when did you decide to pursue multifamily? And it's, people often, 90% of the time, remember the exact moment when they decided multifamily. And from that point on, they're literally 12 months to 2.5 years away from quitting their job. And I don't know any other business in the world that you can do that with in that kind of time frame, starting from exact scratch. And that's what makes this so exciting to me is that the possibility of financial freedom in the next 2 or 3 years with multifamily is there. And so I did it so many years. I just want people to know about it, and most people don't know about it. So thought I'd share.
Oh, that's awesome, Michael. Let me ask you this: what's the one thing you can recommend that the listeners do today to set them on the path to financial freedom?
I think it's too much to ask people to, go buy my course and, educate themselves. I would say at a minimum, look into multifamily and consume all my content I have on my website, themichaelblank.com, read books, talk to people, really, really look into multifamily and ask yourself the question, is it really true that I can do this without experience? Is it really true that I can do this without any money? If the answer is yes, then why not pursue multifamily? Okay, that's the biggest thing, is to simply look into it and then to decide if it's right for you. And at that point, the next step is to educate yourself, and then people can check out my online course or whatever or coaching, whatever is appropriate for them, or go somewhere else. There's other solutions out there. But the next step after they've decided is definitely to educate themselves, because it will open people's eyes to what's possible. I mean, you're sitting there in your own reality. You don't really know these things. You're like, well, someone told me it's possible, but if I show you the 10 steps and maybe some details about how you can do it, people kind of go, oh, I didn't know you could do that, and now I actually know how to do that. Like I still got to figure out the details, but I can see it. And when people can see it, they start to believe it, right? So first step is just look into it, consider it, consider what I just said, and test what I just said, and then next step would be simply to start educating yourself.
No, that's awesome. I love it, Michael. Hey, before we wrap this up, what's the best way for our listeners to find out more about you and get in touch?
People can find me at themichaelblank.com. That's THE. Michael Blank is BLANK. And a great first step is to start with I have a free ebook called The Secret to Raising Money to Buy Your First Apartment Building, since that's usually the biggest objection for people. And you can get that on the site. You can also access my podcast. I have blog articles. I have YouTube. I have a ton of stuff. And then I have various paid programs that people can consider if they're done with the free stuff. So that's how people can find me.
That's awesome. Michael, I want to say thanks again for taking the time to talk. I hope we can do it again soon.
I really enjoyed it, Darren. Thanks so much for having me on the show.
You got it. For our listeners, if you like the show, share it with someone you know. Send them a text with the show's link so they can hear Michael's story and his multifamily investing tips so they can grow their real estate portfolio too. Remember, the more you know, the more you grow. That's all we've got this week. Until next time, thanks for listening to Commercial Real Estate Pro Network's CREPN Radio.